Welcome to BitBoy Crypto, the people's channel, home of the BitSquad, largest and greatest crypto community in all the interwebs. No channel works harder to keep you in the know about crypto. All right, guys, so let's talk here about our philosophy number 2. Now, yesterday, if you tuned in, we talked about our first philosophy, which, of course, is developing a long-term mindset. So as we move through these, you have to always remember anything that involves keeping a long-term mindset, which we talked about the subsets of that yesterday, that's all going to apply to every other philosophy we look at. So, keeping a long-term mindset is what you have to do throughout, trading to win, but it's not the only thing. So, you also have to do our number 2 philosophy, which our number 2 philosophy is understand market behavior. Well, you might have seen the market psychology cheat sheet, shows the different stages of a market cycle: anger, panic, euphoria, disbelief. There's tons of other things involved there, but there are more things than just understanding that you have to do when it comes to crypto and Bitcoin. So number 1, when it comes to understanding market behavior, you have to get to know the Bitcoin cycles. Now, people are going to argue and they're going to say, well, this cycle is invalid, or, they're all different. Look, it's starting to look like this cycle over the last 4 years is almost exactly like the one before, with only one exception, which is a double top. Okay? 69K at this point very easily could have been the top of this market cycle. I think a lot of people are waking up to that fact with all the stuff that's going on with Russia and Ukraine, the Fed, the Fed hiking rates, all this stuff, the whole 9 yards. I think people are realizing, like, hey, we said for years the top would be at the end of September. This is the beginning of November. We might have been pretty close. We were just too confused by the number. We kept thinking it was going to get to 100K. It didn't even get close. Topped out at 69. So the point here being is this. The Bitcoin cycles, it doesn't matter what the behavior is from cycle to cycle. They all share one thing in common, okay? The center of these cycles are the Bitcoin halvings. The next one is going to be in, probably, March to April of 2024. The last one was in May 11th of 2020. And, leading up to that event, people were really excited about what that would do for the price. And it did lead to a rally. So we're, of course, going to talk a lot more about Bitcoin cycles. We still believe in the Bitcoin cycles, but the halvings are not going to change. Now, what do these halvings do? Well, they half the number of block rewards. Right now it's at 6.25. So the next one, it'll drop down to 3.125 or whatever the case may be. But the fact is that this still is going to happen every approximately 4 years, or exactly 210,000 blocks. What this does is this cuts the production of Bitcoin in half, okay? So right now there's about 900 Bitcoin being mined per day on average. In 2024, it'll move down to 450, and then it'll go down to 225. And you really start understanding the compound effect of this halving and the cut in production. This is not going to change. This creates, buying pressure at different points and selling pressure at different points for miners. Miners are the biggest whales out there. Don't be confused by that. Many of the top 100 Bitcoin wallets are early miners. That's how they got, so loaded. A lot of people in Russia, people behind Cointelegraph, for instance. But, the thing you got to keep in mind here is this is not going to change. These cycles are going to be important. It is fundamental. Bitcoin drives the entire crypto market. You have to understand the Bitcoin cycle and the general movements that it generates. It really guides all of our investing. That's why, usually in the middle of a bear market, you can kind of have a good sense of when it should approximately be. Top of the market, when it should approximately be. And even if this totally changes, the fact is the halving event is still going to occur, and it will still have an effect on the markets. So that is number 1. Number 2, do the opposite. Do the opposite of the masses. Do the opposite of the masses. Retail. What is the difference between retail and institutions? Retail traders are people like you and me. They just trade, they make buys, they use Coinbase, they use regular exchanges. I'm not an institution, you're not an institution, we are not a bank. We are just working with our own money. When you are only working with your own money, you are considered to be a retail trader, okay? Retail traders generally lose. Not all retail traders, of course, but the vast majority. That's why that market psychology cheat sheet works, because they generally lose. What do we see? We see fear and FOMO on the markets. When there's fear and FUD, that means there is a negative sentiment towards crypto and prices are usually dropping. Those are usually good times to buy dips and accumulate positions. On the opposite, with FOMO, fear of missing out. When you see a price going way up, there's this instinctual feeling of like, man, this could go to the moon. I need to get in on this. And sometimes we see projects like Sandbox or Solana that seem to defy that rule. They just keep going up. They went up, very consistently for, a large portion of the bull run. Dogecoin, Shiba, these are other ones that had those same kind of massive runs. They defy, but in general, most of your crypto projects are going to hit ceilings very quickly and then retrace, okay? You have to learn how to manage that fear and FOMO and do the opposite. When people are FOMOing in, that's a time to sell. So you have to do the opposite of the masses. You have to get to know the Bitcoin cycles. The third thing is that you have to understand general trading principles, okay? It doesn't mean you have to be a trader. We're gonna get more into trading when we talk about becoming an expert. If that's the track you want to get on, we of course got Frankie Candles. You guys can go check him out on YouTube. He does a phenomenal job, part of the BitBoy Crypto team. But the fact is, you have to understand general trading principles. What I mean by that is, here's a really great one, okay? Here's a really great one. And it kind of goes back to number 2 in a sense. Buy in the red, sell in the green. You want to take profits when you're up, and you want to accumulate when prices are down. Like, that is a very simple trading principle that's very, very, very easy to understand. Knowing whether we're in a general downtrend or a general uptrend. These are things that are important to know. So we're going to be looking at some of these general trading principles. You need to understand the difference between swing trading, day trading, and hodling. Hodling is a trading principle, really. Understanding what hodling means. We call it hodling. It comes from a typo from a Bitcoin talk forum back in, I think, 2012 or 2013. And the fact is, it just means to hold. And of course, we are very famous for saying hodling is a lazy strategy. It is to an extent. It is to an extent. Take profits along the way, and then when prices go down, you have money on the sidelines to buy. That's really what we were saying. Of course, we would have liked to have called the exact top, but we didn't. We were off. We missed it. And so it's not like we dumped a bunch of Bitcoin and made a ton of money at the top. We wish we would have done that. That should be your goal. You should want to dump Bitcoin at tops and reaccumulate. But for some people, hodling is just a better strategy because you don't want to necessarily pay attention to the market 24/7. But if you're watching this video, then you're in crypto, then you do have, probably the intelligence and the experience to understand that there are advantages of taking profits along the way. A good general trading principle, taking profits. Taking profits is another example. Learning what dollar cost averaging is, how you can do that. We'll talk about that in a video. So there you go. That is how you understand market behavior. The 3 most important things: you got to get to know the Bitcoin cycles, you have to do the opposite of the masses, and you have to understand general trading principles or trading strategies. I think that these are 3 things that we're going to really focus on. I think when you really understand all this, you're really going to do well in crypto. All right, guys, that's all I got. Be blessed. BitBoy out.